Hi, my name is Gates Adams. I'm the founder of GACTradingPro.com. Today I'm going to go over how to trade futures for unlimited profits without risking your life savings. I'm going to share with you a company called Apex Trader Funding. As the name indicates, they're a funding company that can provide you with a funded performance or proprietary prop account if you can pass a simple evaluation showing that you know what you're doing as a trader. If you've traded in a funded performance account before, I'll talk about the differences between Apex Trader Funding and some of the other funding companies out there. If you're not familiar with how funding companies work or even know that they exist, the next hour or so may change the way you look at trading forever. If you're skeptical, that's natural. Why would anybody give you money to trade with? Even though they're pretty commonplace these days, I will answer that question in detail in just a few minutes. That said, let me explain who I am in relationship to Apex Trader Funding. I'm not a part of the company. I've known Daryl Martin, the CEO, and John Skelton, the COO, each for well over 20 years. In fact, I introduced them. For the last decade or so, they have operated a trading education company, which is not what we're talking about today. If you're here to learn how to trade, you're in the wrong place. But if you want more information on that, just PM me on my Facebook page and I can offer a bit of guidance on that. Anyway, in the course of training people on trading strategies, Daryl and John recommended to their students that they trade in a funded performance account, or a PA, in order to minimize their personal risk. In fact, they themselves traded in a performance account as well. After Daryl earned a particularly large payout, the company they were using changed their policy across the board, setting a maximum payout per trader. I'm not saying the policy change was because of Daryl's payout, but the change of rules in the middle of the game seemed unfair to him. So, after looking a little deeper into it, he realized he was able to start his own funding company and set rules that were more trader friendly, with the intention of attracting better traders and setting the standard for the industry, all of which we'll go into much deeper as we go through this presentation. So, what is my role? Well, for the last 22 years, I've owned a mattress shop. I spent decades learning about marketing principles, particularly online. I'm not a trading guru, although I do trade, and I'll go into more on that in a few. Daryl is the most successful trader I've ever come across. In his education company, he operates a daily trade room, and he's generally there trading live daily himself, putting his money where his mouth is. He's not your typical trading guru that has, had a good run and then sold education products for a living. He is and always has been a trader first. So we teamed up so that I could bring my marketing background to their business, as well as help traders like you find a way to earn more money trading and risking less. And in a moment, I'll explain in brutal, horrific detail why this program means so much to me and why I'll work my butt off to bring this to as many traders as I possibly can. So, first of all, let's talk about why trading is such an appealing side income, and for many, a primary income. For most of you, you've been trading for a while, and you each have your own reasons, but they'll typically fall within one of these main general categories. One is to save up for special occasions or a large purchase. More and more people are trying to steer away from debt and payments. Instead of putting the big trip on a credit card and paying it off for the next year until it's time to take the next big trip, rinse and repeat, or buying a new car, a boat, or in some cases, even a second home. The goal is to make and save the money to purchase it in cash instead of taking on yet another payment. The problem is most people get into a cycle where their regular income just covers the bills and maybe a little bit of savings. Saving $20 or $30 or $50,000 or more in cash isn't very likely in a reasonable amount of time when the monthly savings is a few hundred or even $1,000 a month. Adding a trading income allows many traders to set aside a larger amount faster without having to change their lifestyle while doing so. Two is paying down debt. Again, it's so easy to rack up debt, financing large purchases, high credit card balances. Some traders are getting tired of half of their monthly budget going to things that they already purchased, many of which are devaluing while they're being paid off. Adding a small extra income dedicated to paying down debt can have a profound effect on long-term debt, making their regular income go even further. Three is having a side hustle to beat inflation. Look, according to CNBC, in March of 2022, 64% of Americans live paycheck to paycheck. It's almost 2 out of 3. So statistically speaking, there are 142 people on this call today. Roughly almost 100 of you are currently living right at your capacity. When you get into 2022 with massive inflation numbers on things like gas, groceries, rent, things it's harder, in many cases impossible, to come back on, all of a sudden that delicate balance shifts and you start falling behind. That little extra can mean the difference between making it and digging deeper into debt. Four is quitting your day job. So many people these days are tired of dealing with bosses, employees, government interference in business, long commutes, office politics. The list of work complaints goes on and on. That once reaching a level of proficiency, many traders choose to leave their day jobs to trade quote unquote full time. One of the benefits of trading for a living is that in order to earn more trading, you don't necessarily need to trade more hours. With the same amount of time and skill, a trader can increase their income simply by trading more contracts. It all sounds so simple, but the harsh reality is that generating that income, whether it's just for extra money or your primary source of income, there are inherent risks involved. Even the best traders have losing trades. Look, there's no holy grail to trading. Every well-crafted strategy works for some traders, and every one of them is a loser for someone else. Every trader who succeeds long-term will find the strategy that works best for them. That said, there are generally three big factors that will determine a trader's success. One is trading capital. You have to have enough funds to be able to safely trade at the level needed to earn the desired income. It's unlikely that a trading account of $1,000 is going to consistently generate $10,000 a month in income. If you're trading enough contracts to potentially generate that kind of income, one bad trade could wipe out the entire account, even if you're the most skillful trader out there. You have to be working with enough capital to survive the drawdowns of a bad run. Two is discipline. Any consistent trader will tell you that you have to have a set of rules that you're willing to follow to the T, without exception. Whether that's your actual trade strategy, your risk management rules, or even the hours and the instruments you're trading, changing the dynamics can affect your results as a trader and usually not for the better. A good decision at open may not be so great during the lull at lunch. What worked well on NQ may not be as effective on crude oil. And three is trading psychology. Can I get a yes in the chat if you or any other trader you know has ever traded really well in sim, but when money's on the line, everything breaks down? Yeah, look at that. Quite a few of them. Look, like it or not, when you stand to win or lose real money, the dynamics change. When dynamics change, results suffer. So who is this for? If you trade well, if you're a competent trader, but you don't have the overall funds or for whatever reason can't commit the funds to trade enough contracts safely to reach your goals, I'll show you how to make sure you have the capacity to trade the right number of contracts to meet your goal. Or if you trade well when you're paper trading but fall apart when real money's on the line, I'll show you how not having to put your savings on the line will help you be more consistent and more profitable. If you're both, well, you're definitely in the right place. So to start, my advice to you is to stop looking for the magic strategy. We've all Googled, YouTubed, asked around, been to every seminar. If there was a magic strategy, we would have all found it by now, and we'd be sipping fruity drinks on our own personal islands. Look, every decent strategy will work well for some traders and not for others. The problem isn't the strategy. I hate to tell you, and you probably know this, the problem lies within you. So my goal for this web class is to, one, show you how trading someone else's money is the key to scale up and to the level of income you're looking for and manage bad trade brain. And two, show you that Apex Trader Funding is the only company that is trader built, trader driven, and trader friendly, ensuring that you walk away with more money at the end of the day. So look, let me share a quick story with you as to why I have such a deep passion for Apex Trader Funding and what they do. You may listen to this and think how convenient. Your personal story meshes a little too well for what you're presenting. The fact is that's true. So is 100% of the story I'm about to share with you. I don't believe that things happen by accident. And considering my friendships with Daryl and John preceded either of them entering the world of trading, I do deeply believe that things happen for a reason. In 1998, my father was diagnosed with cancer, and 7 weeks later, he passed away. That's all the time we had to prepare. He was 59. He was a commercial real estate broker, but he traded on the side. He was one of the smartest people I've ever known and, quite frankly, my hero. He had developed and mapped out a trading strategy that he'd been using successfully enough for a few years. I learned a strategy and began trading it. It was going well, so my mother had me trade what she had, which was what my dad had left her, and it started going really, really well. In fact, in a matter of just a few months, I turned about $100,000 into almost $700,000. Every trade seemed to go my way. I was trading a fund that doubled the movement of the NASDAQ composite, and if you're old enough to remember 1998, the NASDAQ moved very aggressively. The strategy had me shift from a long position to a short position, back and forth multiple times a day. It was pretty intense. I convinced myself that this was a gift from my father, that in some way he was taking care of us from beyond the grave. In my head, I was already spending our newfound fortune until one day it just went south. My timing was off. I lost trade after trade as I followed the signals my dad had developed. It had gone so well before that I had every confidence that it would turn back around. After all, 7 times over in just a few months almost. It had to turn back around. Well, it didn't. And within less than 2 more months, I wiped out the entire account. Now, in a frenzy of disbelief, grief, and greed, my mother and I decided that it had to come back. And we had a terrible, terrible idea. We did the unthinkable. She refinanced her house, the house that my father built when he was a builder in the 70s. It didn't take much longer for me to lose all the rest of it. So now, having just been widowed, my mother was also financially destroyed by me. Trading a system I didn't fully understand and having no concept of how to manage risk or when to stop trading. I was the definition of an emotional trader. I crashed on a friend's couch and wallowed for about a year before I was able to even think about putting my life back together. So anyway, let's take a shift here. What we're going to talk about today is the 3 keys to how trading a PA can make you more money trading without having to risk your life savings to get there. In key number 1, we're going to cover why a company would take the risk of providing traders with a funded performance or prop account. This is probably the most important key because the biggest factor that keeps people from taking advantage of the power and protection afforded to traders with a performance account is skepticism. Let's face it, there's tons of scams out there, and yes, you have to proactively defend yourself from falling victim, but when it comes to skepticism regarding PAs, it 100% stems from not understanding how these accounts work and, more importantly, why any company would take on this risk. In key number 1, we'll go into detail as to how these PAs work, why they're so effective for traders, and the biggie, why. Why would these companies take on the financial risk in order for you to earn more and risk less? I'm going to go through examples and share a few more stories to illustrate the power of a PA for traders looking to bring in real money regardless of where their skill set currently stands, as long as they have what it takes to pass an evaluation. In key number 2, we're going to delve into the psychology of trading. We talked earlier about why people trade, and all of the scenarios listed are banking primarily on the presumption that a trader can consistently earn from their trading. This is not necessarily a reality for many traders, not early on at least. Look, do you guys know any traders who learn their strategy well, can consistently trade profitably when they're paper trading, but as soon as they transition to their live account, their results change, and generally not for the better? The fact is, this happens to almost every trader in their trading career at some point. They transition from paper trading to live trading, and it's very often painful for traders depending on their financial stability, their risk tolerance, and their overall persistence. Many traders that could have made fortunes trading will never progress beyond this point. Let's face it, if you blew an account that was meant to double your savings contribution, it ends up costing you 2 years just to replace what you lost. You may never open a chart again. For some of us, that situation can look significantly worse. So what causes this shift in results? We're going to talk about how utilizing different account size, outside voices like parents, spouses, kids, etc., and more often than not, the simple concept of fear of loss that does not exist when paper trading all of a sudden become the primary factors when trading live and how they can affect your trading decisions. I'll demonstrate how trading within a PA completely changes that dynamic, offering an unlimited upside while minimizing downside to a small fee and imposing a set of risk management rules that will literally force you to be a better trader psychologically and methodically. And finally, in key number 3, we're going to go through how to leverage a PA to scale your trading income to whatever level you desire. Once you've learned that by eliminating the fear of loss, you have gained control over your own trading psychology and can ultimately trade consistently and predictably, you can minimize the risk associated with your trading so that you can control your trading income to literally any level you choose. You'll learn how to do so by 1, selecting the appropriate PA size to allow for that for the income that you're seeking, and 2, for qualifying for multiple accounts so that you can spread your risk. And if you do have to requalify for an account, you have another account already qualified and can continue to trade for income during the time that you need to replace and reevaluate for the PA that failed. And 3, leverage multiple accounts to test and track your results from different trading strategies, instruments, and approaches. Basically, the split test and diversification methods to mitigate risk and maintain a more consistent trading income level through varying market conditions. So let's go with key number one. Why would a company take the risk for you to trade, give you 90% of the profits? Well, first things first, how does trader funding work? First of all, let's kind of have a visual of how this works. You're going to start off with an evaluation account. An evaluation account is the equivalent of a credit check for a loan, which we'll go into a little bit more detail on this in a few moments. This is where a funding company is able to gauge your risk profile, so to speak. Instead of looking at historical trading results, which can easily be manipulated and cherry-picked, they set you up with a demo account logged into their system, and they're able to verify your trading results in real time in real-life conditions. The purpose of the evaluation account is to show the funding company what you're capable of. You'll be given a profit target so that you must reach in order to pass your evaluation. The reason for this is fairly obvious, but just to be clear, the funding company wants you to prove that you can be profitable in live trading conditions. There are three important factors they're looking for. 1, profitability. 2, risk management. And 3, consistency. To determine profitability, they set a profit target that must be reached in order to qualify. So, for example, with a $50,000 evaluation account, you must reach $3,000 in profit to pass. For the risk management, there is a trailing threshold that can't be hit. So for the example of the $50,000 account, you can't drop below a trailing threshold of $2,500 from any given high. And for consistency, a minimum number of 10 trading days must be logged, minimum of 1 trade per trading day. They don't need to be consecutive. You just have to actively trade on 10 different days in order to pass the evaluation. The point of this is that if you hit one big profitable trade and just stop, that doesn't show your skill level. By trading for 10 days, you show that you're able to consistently manage profitability, risk management over time, and multiple trades. You don't have to trade any particular strategy, but there are rules that must be followed in order for the funding company, who is taking the trading risk, to manage that risk in a way that makes sense to both you, the trader, and the funding company. If you don't pass the evaluation, you can reset it for $80 instead of the full fee to open a new one. Look, mistakes happen. Markets are unpredictable. Shit happens sometimes. Just reset it and go back in and get it. This is really the point where most of the fees come into play. So first, I think it bears explaining why those fees exist. First, it's a revenue stream for the company, which helps offset the risk that they're taking on you. You have unlimited profit potential and no downside trading risk. So they take on all of that trading risk themselves. This means they're going to have some losses that will need to be covered, and this is part of the structure that helps them offset that risk. Secondly, with those fees, your data feed and license for NinjaTrader 8 are covered. Now, you don't have to trade with NinjaTrader 8 or use the license provided, but most of their traders do and benefit from this cost-saving feature. Lastly, in my opinion, probably the most important factor is that you, the trader, have to have a little skin in the game. You'll make better decisions for both you and the funding company if you know it's going to cost you a few bucks if you make a mistake. That's not to say mistakes won't happen, but studies have shown that there's more motivation to avoid loss than there is to make even more. Even if the loss is just going to cost you 80 bucks versus literally uncapped gains, but there's a limit to where this is beneficial, which we'll talk about in key number 2. Look, $80 or a couple $100 to pass an evaluation again if needed or whatever does not have the same psychological effect as having $25,000 or more on the line in your own trading account. Real quick, look, can we all agree that a couple $100 is not the same as your life savings in terms of risk? That becomes the difference between real financial risk and a cost of doing business. So, like, for example, I had a mattress shop for 22 years, like I said. Paying a few grand a month in rent, advertising, employees, inventory, these weren't considered risk. They were just expenses I had to pay in order to make 3 to 5 times as much, which constituted my income. The nice thing about trading is the return on investment can be hundreds of times over, not just 3 to 5 times over. So anyway, for an evaluation account, Apex Trader Funding collects small fees on the evaluation and reset fees. They have zero risk at this point. They collect little money in fees, and when you pass the evaluation, you move into a performance account. A performance account is an account that the funding company provides traders who can pass an evaluation. Once the evaluation is passed, you, the trader, trade with this account and keep the vast majority of the profits, but you do not have to put up the capital to trade with. Your performance account size is equivalent to the account size you passed the evaluation with. At this point, you trade as you see fit within the guidelines set by the funding company. You can see the list of rules on their website. They're very reasonable, but I do suggest you review them when you're signing up so you know exactly how to get the most out of your PA. This is where you get the opportunity to make money without having to risk your savings. Apex Trader Funding pays out 100% of the profits for the first $10,000 and then 90% thereafter. At this point, their fees are just $85 a month. They still include the data feed and your NinjaTrader license. The rules for the PA are essentially the same as the evaluation account with one notable exception. In the evaluation account, the trailing drawdown threshold continues to trail until you pass. You have to be careful not to let the account drop below that threshold at any time. Once you've passed and you're trading in a performance account, the trailing threshold stops at $100 above the initial account size. So, for example, if you have a $50,000 account with a $2,500 trailing drawdown, once the account size reaches $52,600, the trailing threshold stops at $50,100, $2,500 less, but only $100 over the initial account size, no matter how high the account gets, giving you more flexibility for whatever market conditions you encounter without losing the account. If you do drop below that threshold, the account is closed, but you can simply reevaluate. If you renew the same account that you failed, you can actually get a new evaluation for 80% off the regular evaluation fee. Why? Well, you've already proven yourself. It's not about beating you up with fees so much as giving you the pattern interruption to get your head in the right place before you move forward. Once you pass again, you're back in trading for profits. You can request a payout monthly based on the profits of the account with a few initial limits on the first couple of months when the account's brand new. Your maintenance fee still covers your live data feed and your NinjaTrader license. Now, technically, this is still a SIM account. Apex Trader Funding has in their programming the option to trade their account mirroring your trades in real time that they can turn on and off as they see fit based on your trading performance. The main reason for this is risk management and profitability on their part. If you're inconsistent, they're not losing money. When you're due a payout, you're paid through fee revenue and profits earned from other traders. When you get to the point where you're trading consistently and profiting consistently, you're actually paid out through the trading profits, and any losses incurred are covered through the fee revenue and profits earned from other traders. You may never know when real trading is happening in the background, but as far as you're concerned, it really doesn't matter. When you're profitable, you're paid out. When you experience losses, you're not responsible for that financial burden. So let's take a quick look here. This is their website. This is updated monthly. You can see here on their website, the average monthly payout so far for the year is a little over $300,000 monthly paid out. And they've paid out so far this year over $2.4 million. And as you can see here, over 3,300 PAs funded just last month. Okay, so it should comfort you knowing that they're very good at what they do and the company is financially sound enough to be able to pay out these kinds of profits to traders consistently without fail. Just like the credit card companies that have multiple revenue streams, so does Apex Trader Funding. All right, so I should point out that this is where most funding companies stop. Some have programming to trade with you at this point, some don't, but if this is as far as the company is willing to take their structure, especially if they don't have the ability to trade with you when you're winning consistently, then what's their primary source of revenue? Right, fees. So what's their primary expense? Exactly. Yeah, payouts are the primary expense. So funding companies know a fundamental rule of trading. What most people in the industry know is the 90-90-90 rule. 90% of traders blow 90% of their account in 90 days. This is obviously an oversimplification for the sake of defining a quote-unquote rule, but it's really not that far from reality. So a basic business fundamental, of course, is to maximize revenue and minimize expenses. They operate like an insurance company that loves collecting premiums, happy to pay out, here and there on a small scale, but in constant fear that that disaster payout could wipe out the company financially. Instead of losing your money from trading activity, many companies are happy to let you lose the same amount of money in the same time frame to them in the form of fees. This is where some funding companies get a bad rap because they're always looking for ways to quote-unquote fail your account so that you have to start over and pay more fees and without a payout. Traders that have worked with companies like this tend to be the ones that have that immediate gut reaction that funding in general is too good to be true, call it a scam or whatever. The fact is that most are not a scam. They outline the rules ahead of time and they do pay out as described. They're legit. But with the company not being aligned with the trader's goals, there is a naturally adversarial relationship. They make money when you fail. They lose money when you win. You can usually tell these companies by looking at their fee structure. Their fees are generally much higher because they need them in order to cover every winning trader they have, as this is really the only revenue stream that they have. By keeping the fee structure lower, Apex Trader Funding allows you to take the same amount of time and the same amount of money and stretch it out over a much longer time, giving you time to hone your skills in every conceivable environment. Along the way, they have the ability to turn on live trading based on your performance. They actually have the ability to profit from your actions as a trader, regardless of your personal performance. But for you, this means more time, more opportunity to develop your skills in a cash-enhanced environment with the end goal of the company's long-term profits coming from your success. Now, let's talk about company profitability. Some traders, especially those that have had a bad experience in the past, start to twitch, as I call it. They think that their funding company profiting is a bad thing simply because they're holding on to the adversarial relationship that either they assumed or have experienced with another company. The fact is that when managed correctly, it's directly beneficial to the traders for the funding company to be as profitable as possible. For the trader, it allows the funding company to bear the weight of the risk on both sides so that the trader can stay in the game long enough to turn it into a profitable business. So instead of blowing a few thousand on the quote-unquote learning process, they spend $100 or a couple $100 on some fees to get, and they get to start over. The big key is that during that time, you can actually earn profits while learning, while making mistakes, while gaining the experience necessary to become a live for-money trader. Apex Trader Funding is there to support you along the way, and for them, this is sort of a second level evaluation. As we'll talk about more in the next section, many traders trade differently when real money's at stake, whether through risk or with the prospect of profits. This is where you show Apex Trader Funding that you can handle that transition from simulation to real money exchanging hands. Once you've proven that through live trading for money, Apex has the option to promote you to level 3. This is what they call a prop account or a proprietary account. This is for consistently profitable traders. This is where they fund the account you trade with real money. Your trades go directly to the exchange, no special programming, no turning on or off. You are now a partner of Apex Trader Funding. Your profits are paid out through your trading profits. The payout structure is exactly the same for you, but you won't notice a difference in the risk or payout. But at this point, you've proven yourself as an asset to Apex Trader Funding. You get 90% of the profits, they get 10% of the profits. You're now on the same page. You have the same desired goal in your trading performance. The rules are the same as a performance account, meaning that the rules that are in place are 100% designed to lead to your success. I do hope by the time we're done here, you'll want to work with Apex Trader Funding. But regardless of your decision, if you ever work with a funding company, make sure there's a path to a prop account. Otherwise, you're working against the company. And their ultimate desire is to collect as many fees as possible from you before you eventually leave them, as your goals will never be in true alignment. So by following through with the account structures, your willingness to share a small amount of your profits and covering some of small initial and maintenance fees, you no longer need to fund your own account and can take on the risk in order to trade. That risk is now absorbed by the efforts of tens of thousands of traders using this service, and you're supported by a company that is completely aligned with your short-term and long-term success as a trader. You now get to trade for profits based on your skill level, not based on how much of your own money you're willing to risk. Now, I'll tell you, looking back, when Daryl told me about the company he was working with at the time, which he was recommending to all of his students and using himself, I did have some questions. Look, with my background, my first thought was, why would anybody let me trade their money? I mean, over $800,000 in a matter of weeks. It didn't take a rocket scientist to figure out that they wouldn't let me blow an account like that. I had no real rules when this happened. If you're trading in a PA, there are rules you have to follow. If you fail an account, basically lose too much, you have to start over. It's a pattern interrupt. It costs you money. Not a lot of money, but it bites a little bit. It has to. You have to have some skin in the game, as we talked about. Otherwise, you'll treat it just like a game with unlimited lives. When you fail a PA, just pass a new evaluation. Once you've passed your first round on that account, evaluation fees drop to 80% off. Like I mentioned, you've already proven yourself. The purpose is to get your head back in the right place, and you just need that pattern interrupt to remind you what it takes to pass an evaluation is the same thing that it takes to be successful in your PA. You also stop chasing. Your new account has nothing to do with the old account. You're not trying to make up for any losses. Plus, psychologically speaking, you start your new PA with a win. I mean, you have to pass an evaluation again. So before there's any real money on the line, you've just boosted your confidence with a win. In addition to the rules being in place to manage risk, they will actually make you a better trader. You simply will not be able to continue trading a PA if you're breaking the rules, losing too much without stopping and reevaluating. The rules revolve around things that you learned or at least should have learned when you first started trading. Rules that you should impose upon yourself, but we often don't. If you're just trading your own money, who's there to save you from yourself? I mean, look, I'm the perfect example of that. By trading with a defined set of rules, it forces you to trade better until those better trading habits become second nature. If you ever decide to trade outside of a PA ever again, in all likelihood, you will trade better because of the structure the PA gives you. All right, so why would a company take this risk on you? The answer is pretty simple: profitability. Apex Trader Funding, like virtually every company in the financial sector, operates under a set of proven guidelines that minimize risk in order to utilize their resources for profits. So let's discuss risk. Statistically, about a third of American adults have an open collections account at this moment. You can find anything on Google, right? I can't find stats on Google about what percentage of Americans have ever had bad debt written off. If you ever find that stat, please send it to me. But I've had bad debt written off. I'm not proud of that, but it's true. There's about 140 of you guys on here. It means that statistically, about almost 50 of you currently have something in collections. I'm willing to bet that almost every one of you at some point has had something written off. Look, let's look at this for a moment. When a bank issues a customer or a business a credit card, the consumer can now spend the bank's money instead of their own, based on a risk qualification, which they use as, of course, their method is a credit check. The bank expects that this money will be paid back because of the creditworthiness of the cardholder. The bank will likely charge a small annual fee. They'll collect interest on any outstanding balance. They collect small fees for every transaction placed on that card and, every other card issued to the millions of other cardholders. The cardholder gets to manage their finances better through the use of the bank's money, not their own. They have the flexibility to pay it off or carry a balance for a nominal fee. They can manage cash flow by having time. Often they get perks like points and discounts. Everybody wins, right? Now, different companies work with different risk profiles. If someone proves to be a higher risk, they're likely to pay more in fees and interest, but this gives them the same perks as well as an opportunity to reestablish their credit profile so that they can get better rates in the future and pay less. When a cardholder doesn't pay, the bank accepts that loss, but mitigates that loss by the small amounts of fees and interest that they earn from their entire network of cardholders. So, for example, a $10,000 loss is absorbed when each of 100,000 other cardholders paid just a dime in fees or interest, as an example. This is why financial service companies are willing to risk their available assets and give them the ability to provide much-needed service to qualified applicants. Funding companies look at real-time performance in order to establish risk profiles. Based on historical data, they know what risk levels they can establish, what qualifications are needed, and what costs need to be addressed in order to make this a more profitable model than, say, investing in a mutual fund and getting single-digit annual quote-unquote safe interest. As a trader, you understand the value of risk versus rewards, why we trade in the first place. Again, everybody wins. So, for example, a typical trader willing to risk a certain amount of capital in hopes of a certain amount of profit. Look, these numbers will obviously vary for every trader, but this is an example of what a trader might need to risk in order to achieve a certain profit target level. A similar model can be used to demonstrate risk tolerance for a funding company like Apex Trader Funding. Notice that the risk portion of the graph is much smaller here in comparison to the reward. Why is that? Namely because that risk is spread out over tens of thousands of traders in a model that manages the risk of each trader every step along the way. They're going to have to pay out profits on accounts that are not being traded live. They're going to take losses from traders that are trading live. But with a well-built model, these costs are absorbed and the gains generated by they're absorbed by the gains generated by all of the other traders in the mix. By comparison, any trader's risk versus reward model is just a small fraction of what Apex Trader Funding is looking at by offering a model like this to its traders. If I made this to actual scale, you wouldn't be able to see by comparison the individual trader's risk model, but this kind of illustrates that difference. And by operating in a funded account versus simply trading your own funds, what happens to your risk model? Simple. Your risk is minimized to evaluation, reset, and maintenance fees. Again, this isn't the scale. If it was, you wouldn't even be able to see the actual risk component here, but you get the idea. So here, looking at both models side by side, it's much more clear to see how, with these risk models, everybody wins. Now, Daryl, like I said, he's a very active CEO in the day-to-day operations of both the funding company and the education company. And I get comments all the time. People, a lot of people know him by name. I've had people comment that, hey, if Daryl's such a great trader, he wouldn't need to start a funding company. Well, that's like suggesting that a person has a glass of water. Why would they need a faucet in their home? This is how companies like this exist in the first place. One has nothing to do with the other. The fact that Daryl still trades and is so active with students and clients in the business is a testament to the fact that he's a trader first. And his companies revolve around being more trader friendly and more trader driven than any other similar company out there. At the end of the day, it's better for you and for the funding company when you do well. You have aligned goals. They help you earn more by risking less personally. Their risk tolerance is much higher than yours. And they know statistically, that they will always earn big in the long run, regardless of your performance over any given day. That's their incentive. For you, you'll have more money in your account at the end of the month, regardless of how you perform today, because your coverage on the loss is minimal to what it shows to the amount of the PA. The very definition of leverage and risk management, which in terms of benefit to you, far outweighs whatever profit Apex realizes along the way. All right, so let's go to key number 2, the psychology of trading and how to overcome the fear of loss by trading with a PA. So look, another quick story. Back in 2010, 2011, I did some consulting for another education company that was teaching different trading strategies. My job was to be a coach for their students to ensure that they understood the strategies. I reviewed their trades. I troubleshot their execution. Ultimately, it was my job to make sure that they were making money trading. I was pretty good at my job. The feedback from the students was that I made them better traders. I understood the strategies and could help my students get better. I quickly became one of the most requested coaches, to the point that I didn't have time to take on all the extra students and ultimately had to refuse the extra work. The irony through all of this was that I still couldn't trade for myself. I tried. I paper traded with as much consistency and results as would be expected from a trainer and a coach. But there was this block. I couldn't trade live. I couldn't use the strategies myself. I knew them well enough to teach them. I just couldn't execute effectively. This was really the point where I realized that because of my experience, I guess 12 years earlier, I was getting in my own way. What was in my head was the real problem. Look, some traders trade very well, very consistently when paper trading. The second money is on the line, things can change. The first reason skilled traders often fail is the psychology of trading. Paper trading can be like a video game. You practice, you get better, you find tricks that work for you, for your trading style. You wipe out the account, you start over. It's like back in the day for, those of you old enough to remember, back in the video game example, if you lose, you drop in another quarter, you start over. No major risk, no major reward other than the satisfaction of getting to a higher level than you did before. You got to know each level you'd passed very well, and you just repeated a pattern until you hit something new. Then you figured that out. For a lot of us, learning to trade is the same way. We start to recognize those patterns. We start to see when something looks good, what to avoid. You get the idea. Look, you blow an account. There's no conversation with your husband, your wife, your mom, like I had to do. You just hit a reset button. So after you've been paper trading for a while, your confidence is up. It's time to go live. So you open a trading account, maybe start small. Look, the definition of small is going to be different for everyone, but let's just say you start off with $5,000. Heaven forbid the first trade is a loser and you drop $150. The first thing that pops into your head isn't, okay, well, let's look for the next setup. No harm, no foul. the first thing you think is, I need to make up that $150. This is a thought that almost never happens paper trading, so now the dynamic is completely different. You're no longer playing the same game you've been practicing for the last few weeks or last few months or whatever. This is a whole new game. New thoughts, new dynamics will change the way you behave. There's a different urgency. You want to hurry up and find your next trade so you can make up that $150. And as anyone who has ever traded for more than 5 minutes knows, never be in a hurry. So what happens? You see another setup, it looks pretty good, maybe just a bit off, but you convince yourself that you can get back up to even, and then you'll go back to sticking to the rules 100%. Well, it wasn't the best setup, and you lose another couple $100, and that little bit of panic starts to set in. Now you need a good trade. Before you know it, you're down $500. 10% of your account is gone. There's no reset button, and we're not talking about a quarter here. If you're smart, what do? You stop. Most of us are not smart enough in the beginning. Some of us have a tough time ever really getting smart. Before you know it, you've blown a $5,000 account, and all the people you told, including yourself, that trading was the solution to whatever your goal was, remember this from the beginning? What was your reason? Now you have to tell everyone that you have to start over again if you can. And not only did you not solve the problem, you're down $5,000. You've made it worse. Some traders never make it past this first blown account. Now, my guess is you're here, so let's go back to the video game example. Let's say you get qualified and you're trading a $50,000 account. You've had a bad run, you fail the account, requalifying's at 80% off, so you're looking at about $35. We're not talking about blowing $5,000. And if you compare the difference in your personal finances now from when you were maybe 14 and maybe factor in inflation from the 80s, it's not a quarter, but the psychological pain is not really that far off. Now you have this low-cost reset button. You can start over, and you're not even chasing whatever you're down in the account. You're back to square one with $50,000. The flip side is when you do make $5,000 in your PA, when it comes time to cash out, $4,500 of that is yours. All right, so for illustration purposes only here, let's look at an example of what this process might look like. So let's say you set up an evaluation account for a $50,000 PA. The evaluation account is $167. And let's say you don't make it to first try. You reset it for $80. All right, great. After that, you passed. You pay your $85 maintenance fee for the month for the new PA. And oops, you had a bad run. You drop below your threshold, your drawdown, and now you need to get a new evaluation. Now, of course, at this point, it's 80% off. You've already passed one. So you're looking at about $35 for that reevaluation. All right. Well, let's say you miss it again. You got to do an $80 reset fee here. And then after that, let's say you passed. You get your $85 maintenance fee for the month. And let's say the next month you have a good month and you cash out $350, right? New month, new $85 maintenance fee. And let's say you missed it again. You grab a new evaluation fee for $35, but let's say this time you pass it on the first try. Experience counts, right? $85 for the maintenance. Let's say this next month you cash out $500. Okay. Another $85 maintenance. And the next month you pick it up and you cash out $1,500. You're now about 6 months in or so. In this example, you're up over $1,500. And the most you came out of pocket was just over $500. And we talked earlier about that forced stop when you hit your drawdown, when you're at the point where people really start to make those mistakes, you're forced to stop. You requalify, your mindset shifts completely back into that square one. You're not emotionally devastated, maybe just a little annoyed, but you're motivated to clean it up and get back to making money. Honestly, that annoyance has to be there. You have to have a little bit of skin in the game. So can you see now how, psychologically speaking, having maybe a few $100 on the line is very different from having $5,000, $10,000, $50,000 on the line? If you just factor that same amount, that $5,000 initial risk we talked about earlier, when you're trading your own money, really, how many evaluation accounts can you pick up at 80% off, no less? How many reset fees does that cover? you can trade much longer for the same budget, if you want to call it that. But let's face it, you're going to have some winners along the way as well that should be able to offset some of those fees. And what do you get when you get to trade 20 times longer, 50 times longer, even 100 times longer? Right, exactly. Experience. You get that much more experience. You get that much more practice trading for money. What effect do you think that this will have on your trading results? Exactly. The more practice, the more experience, the better your skills, the better your results trading. All right? All right. So let's jump into key number 3, writing your own paycheck. So look, unless you've been trading consistently for a long time, in the beginning stages, there will be ups and downs. You may have to reset an evaluation account several times. You may lose your PA. You may have to pass a new evaluation a few times. Consider the alternative. The cost of this experience, if you're trading your own live self-funded account, is several $1,000s each time. This may happen over a period of days, weeks, months. It will all depend on your personal trading style, market volatility, risk management, account balance, plenty of other factors. Look, regardless of the pace, this level of experience is a costly teacher. And for many traders, it doesn't take long to wipe out a significant amount of savings. This often leads to traders giving up. Either they can no longer afford to go on, or maybe there's an intervention from a spouse or parents or other loved ones, or they simply lose faith in the idea of trading for profits. Like any real skill, trading takes practice. And when the dynamics change, moving from sim to live, that practice with live trading is a critical piece of the long-term puzzle. There's just no way around it. The purpose of the transition from sim to evaluation to performance account to prop account moves you through this process with significantly smaller psychological and financial costs. Instead of losing $2,000, $3,000, $5,000 or more for the lesson, you're looking at dozens of dollars, not thousands of dollars, to get back on track. Not to mention the forced pattern interrupt, the confidence that comes from getting you back into the mindset to pass the evaluation, finishing on a win as you move back into your PA, like we discussed before. So what does this have to do with writing your own paycheck? Simple. During this time, you have the ability to collect data in real time. One of the first things Daryl taught me, and every other trading student he's had over the last decade or so, is to have a trading journal. In this trading journal, take note daily at the end of your trading session. What went well? What could have gone better? What your overall results were. You can look at number of trades, number of wins, number of losses, average amount of dollars per win, average amount of dollars per loss, number of contracts, max drawdown, etc., etc., etc. You get the idea. If you jot down every meaningful piece of information, which once you're in the swing of things typically takes just a few minutes, you start to collect data that will help that will tell you what you need to know to establish trading patterns that will generate the income that you're looking for. Remember, in order to make more money trading, you don't have to take more trades. You don't have to trade for more hours. You just need to trade more contracts. It's the ultimate example of scaling your income without putting in more work. As you track your data based on your personal trading style, your personal results, you'll know exactly how many contracts you should be trading, and this will help you determine how many accounts you should be trading, what account size, how to structure your trading business, giving you the knowledge and the skills to write your own paycheck. So let's walk through an example again for illustration purposes only. Fair warning, this is going to get a little mathy, but if you're anything like me, you go through exercises like this all the time. So let's say your target is to make $1,000 a week trading, or let's just call it $4,000 a month. So let's walk through a hypothetical example. Here are your known factors on a per contract basis. Average number of daily trades, let's call it 4. Average winning trades, 2.8. Average losing trades, 1.2. Average winning trade profit, say it comes out to $60 per contract. When you lose, on average, let's say you lose $85. And let's say that you look at your history and you have a max drawdown of $1,250 per contract. And let's say you're only trading 4 days a week. So now, how many contracts do you need to trade to meet your goal? So let's look at it. Your average daily profit, you've got 2.8 winning trades with a $60 average profit per win. That's $168. Minus 1.2 losing trades on average with an average loss amount of $85. That's a $102 loss. So if you have a $168 average win minus $102 average loss, you're looking at $66 average daily profit per contract. So, average weekly profit per contract. Well, $66 a day times 4 trading days is $264 per contract. In order to average roughly $1,000 per week, you need to be trading 4 contracts. Comes out to a little over $1,000 per week. Important note here. At 4 contracts, now you're looking at a max drawdown of $5,000. Now, if you take a look at some of the different account sizes on Apex's website, you can see if you have a $25,000 account, you can trade 4 contracts. But until you've built your account up in a PA, can you handle a $5,000 drawdown? Nah, you've got a $1,500 trailing drawdown. So you can't do that. Now you come over here, you look at a $150,000 account. You can handle a $5,000 drawdown from day one. And you can trade more than enough contracts, but if you have a particularly bad run, you're out. All your eggs are in one basket. You have to pass a new evaluation. This means 10 trading days minimum before you can get back to earning profits. Not to mention, it may take longer to reach that $9,000 profit goal to pass. Let's go back here. If you look at 2 $50,000 accounts, you only need to reach a profit goal of $3,000 per account, which can be completed simultaneously with a trade copier. You can contact Apex for more information on that option if you're interested. Anyway, you're back up and running much faster, but the drawdown risk is split between 2 accounts. You may have an easier time avoiding hitting it this way. As we talked about before, though, you're going to hit it sometimes. You're a trader. You know there are times when things are just going to go against you. When you do, yes, you're going to have to get a new evaluation account and you're going to have to pass it. So this is going to take a minimum of 10 trading days. Based on this, you're looking at 2 new evaluation accounts for $50,000. You're missing out on an average $264 average daily profit. Your potential opportunity cost is about $2,600 minus another $60 or something for your valuation accounts. What a lot of traders like to do is have 4 accounts. 2 you're going to trade daily, and 2 is backup in case you fail the first 2. If you do fail the first 2, while you're passing that evaluation, you're trading the backup accounts, okay? You're still trading for profits. And while there's a little more fee to keep 4 accounts open, just one 10-day period based on this example of live trading, of simply having to pass an evaluation, will cover 15.8 months of extra fees. Let's face it, if you go almost 16 months without losing an account, you're probably not terribly worried about a few extra fees. So either way, you win, right? Okay. Now, let's say you trade more than one strategy. Many traders do. It helps even out the results with shifting market conditions or in determining which strategy is most profitable for them, what's safer, whatever factor means the most to you. You can track your results for each strategy through diligent effort in your trading journal, but it's much simpler if you just trade the different strategies in different accounts. It's much easier to see the differences in results at a glance at the end. And in the end, you may find that one is always better than another for you. You may find that there's a reason to simplify down to one strategy. You may be aware of differences in case you need to adjust the number of contracts in one strategy versus another. Anyway, look, I know this number was pretty numbers heavy. In my experience, traders tend to be kind of numbersy folks. And go through exercises like this all the time on their own. I hope I didn't lose anyone, but if I did, just come back, watch the replay so you can see the progression. Now, if you did follow, do you currently know your numbers? If not, it's time to start talking about a trading journal. Just know you're not locked into doing the same size account for life. At any point, you can come back in and get an evaluation for any size at any time. Most people do this when it's time to do a new evaluation anyway, but Apex does allow up to 20 accounts. You can mix and match sizes as you see fit, which gives you a ton of flexibility in designing and structuring your accounts to give you the greatest advantage. All right. So let's take a look at the different options in evaluation accounts. Remember, whatever account size you set for the evaluation is the account size of the performance account when you pass the evaluation. Each one has its own profit target and trailing stop. The trailing stop will be the starting drawdown when you start the PA, but once you're in a PA, it stops trailing at $100 over the initial account size. So again, $25,100, $50,100, $75,000, $100. You get the idea. You can see the cost for each account size. This gives you 30 days to pass the evaluation. You can take longer than 30 days if needed. If that's the case, the fee would just continue monthly until it's passed. Since you only need to trade 10 days, most people will either pass or reset it within the 30 days, but you have the flexibility if needed to extend that if you have to. Apex Trader Funding offers account sizes ranging from $25,000 to $300,000. Funding evaluation accounts range from $137 to $657, depending on the account size and structure. Remember, this is only during the evaluation phase. Profit targets and drawdowns vary by account size, as we talked about. Evaluation and resets are $80 for any account size. There's no limit to how many times you can reset an evaluation account as needed. Your funded performance account or prop account has a monthly maintenance fee of just $85 no matter what account size you have. And again, once you've passed, if you lose your account, you can get 80% off on your new evaluation. Again, when you're trading in your performance or prop account, your trailing drawdown stops at $100 over the initial account size, and your evaluation accounts, performance accounts, and prop accounts will all include a couple of things. Get your NinjaTrader 8 license for free. That's a $75 value. You don't have to use NinjaTrader 8, but most do. Apex can provide some NT8 specific support. It's the platform they use, therefore they're more specifically familiar with it when it comes to like setting things up, integrations, etc. All accounts also include your live data feed. That's a $55 a month value. Okay, these are real world cost saving bonuses. So for whatever level account you choose, you're saving $130 a month right off the bat. As a special value for anyone who comes in from this webinar, I've worked out a 50% discount on your evaluation accounts, any size for up to 10 evaluations. This means you can get started with your evaluation account for as little as $68.50 to, on the high side, $328.50. Okay, this discount applies for the life of the evaluation. So if you need longer than the month, the discount will still apply. Obviously, as we discussed before, once you've passed your evaluation, if and when you need to pass it again, that evaluation will be at 80% off. So this applies to your initial evaluation accounts. Anyway, all you need to do is enter the coupon code GAC50 when you check out, and the discount will be applied up to 10 accounts. This is what it looks like when you're checking out. Just put in GAC50, just like that. Okay. This is a cost savings of up to $3,285, depending on which accounts you choose and how many you take. So when you set up your evaluation accounts today, you'll be getting your NinjaTrader 8 license, $75 a month value, your live data feed, $55 a month value. You get the 50% discount on up to 10 accounts. That's up to a $3,285 value. You're looking at total savings of up to $3,415 plus ongoing monthly savings. When you set up your evaluation today, click the link below. Make sure you enter coupon code GAC50. You'll get all of this and get started with your very first evaluation account for as little as $68.50. Small price to pay for potentially life-changing services here. Anyway, only for live attendees. As a special added bonus, if you sign up for your first account tonight before midnight, I will throw in an extra added bonus. This is my top 3 pro tips and tricks to pass your performance account evaluation. It's a short, simple, concise document that'll help you manage your strategy in ways that will make it easier to pass your evaluation. Look, the real value of this depends on you. Not only can you save on multiple $80 reset fees anytime you find yourself in an evaluation account, it will also save you time getting back to your PA where you can earn money instead of waiting out another 10 days. So really a measurable value when you're looking at the saving you the opportunity cost. Look, I'm not going to give this some massive BS inflated dollar value to make it seem like a better deal. We do offer this on the website for $99, and it is well worth it. So, quick recap. Sign up for at least one evaluation before midnight, and you will get your evaluation account, which of course the value varies. You're going to get your live data feed, which is worth $55 every month. Your NinjaTrader 8 license, $75 a month value. Your 50% discount on up to 10 evaluation accounts, up to $3,285 value. your top 3 pro tips and tricks ebook, $99 value. Look, if all this did was stretch out your available resources 5 times longer, giving you 5 times longer to smooth out your strategy, your execution, would it be worth it? What if all this did was allow you to double the number of contracts you're trading at any given time so you can increase your profits faster? What if all this did was just save you from one catastrophic loss each year? Is there really any good reason to trade your own savings? Look, don't let this opportunity slip away. You're here because you're ready to start making more money consistently through trading. There is no opportunity that I know of that is more geared toward getting you to this point faster and more pain-free with a more direct route to generating profits in your hands, in your bank account, without the downside risk that comes from trading your own savings. If you're ready to let someone else take the major risks so that you can keep the majority of the profits, click the link below, get signed up for your evaluation account or accounts. You're in control. Start as big or as small as suits your needs, but start today. Thank you guys for joining me today. We'll talk to you soon.